Bad news. Bad news. Rates are no bueno. They're not necessarily doing what we think and hope and wish they would do. I'll explain why, or at least why I think they have been going up over the last few weeks. And in addition, there's a lot of great intel in here, a lot of information. I'm super excited about this week's information. I understand it's a lot. I will try to go through it quickly, but I do want to give it the merit it deserves. And if you even pretend to watch this for a little bit, I promise you're going to learn something. Let me know if you disagree, right? So with my theory that I'm about to throw out here, I'd love to get your feedback, but the reality is this: rates are in the high sixes, almost 7%. And this is with points, I might add, right? So that's the 0.8, usually give or take, is where the survey prices it out. So if you recall, we were looking in the low sixes 4 to 6 weeks ago. So here's what it looks like from a mortgage-backed security chart. Remember, down is bad. Down, this is mortgage-backed security, so it's opposite of where rates go. So this going lower means rates have gone that much higher. And if you'll look, we just broke up that bottom blue line, that 200-day moving average. We broke below it. That's not good. Usually that's a really good friend when you're, when we're above it in this case. No bueno. So could rates go higher? Yeah, I think they could drift a little higher here for a little bit. We'll see what happens. And what's really interesting, there haven't been the normal usual suspects for making this move, like job reports or inflation or things like that. I think it's because of the national debt. If you look at the jump in the debt just in the last couple of weeks of what it's been. And it's because budgets are coming due, right? If you don't spend the money that you have in the government, they're not going to renew your budget at the same dollar amount or more. They would probably cut your budget. So people are spending, and people means our government is spending. And so what that does is that money then competes with mortgage-backed securities. So for mortgage-backed securities to seem more attractive, rates got to go up so that people get higher yield, people meaning investors. And that, I think, is why the big move up has happened in the last couple of weeks. So in terms of rate cut, there is still about a 90% chance that the Fed's going to cut the rates in the November 7th meeting. So one cut means 25 basis points. So 90% of the voting folks say, hey, the probability is here about 90% that they'll cut once in November. And then in December, 68% think they'll cut another time. That 29% is the middle, the folks that thought maybe on the first one they'd cut once, but now they're only cutting just the one and not in December. And then the 2% is people that think there's going to be no cuts for the rest of the year, 0 cuts for the rest of the year. Time will tell. We'll see. So I'm not going to read this to you. There is a lot of good stuff on here, but I think a couple things I'd like to point out. 1 out of 5 homes sold above their listing price. 20% of homes are still selling above ask. First-time home buyers, only about 26%. Usually that's closer to like 30. So about 26% of first-time home buyers. I got a slide in here to tell you why that's down. Cash buyers, about a third of the market. That's pretty normal. You usually see that in the high 20s, low 30s. Investors down a little bit, 16%. Again, if the rates are higher, investors, they're not going to pull the trigger because the cash flow may not make sense with the higher rates. So that all makes sense. But the other part down below, guys, the month supply is still a normal market. 28 days on the market is kind of where we are. So I got a couple graphs for that right here. Days on the market. This is the median, not necessarily the average, but the median. You can see that in the last post-COVID, the last 3 years, give or take, we're sitting between 20 and 30. That means like less than a month. Like that is still a really good market. It may not feel like it when you're the homeowner waiting 3, 4, 5 weekends, but at the end of the day, it's still a good market because supply is down. Here's the inventory. And the part I want to make, see it says 1.35. Yeah, look at that. 1.35 million, still way lower than inventory pre-COVID, right? So still a housing shortage that exists. And watch this. That 1.3 million, these are the amount of homes that actually can be moved into, which is less than a million, because the 1.35 includes homes that are dirt or being built or sticks, like framed. Like you can't move into that. So for houses ready to actual like active listing count on the inventory, less than a million. So we are still woefully underhoused in terms of the amount of available housing to move into out there, which means prices are going to continue to go up. So look at the price growth. All above 0 with a very short exception here in the last decade. This is month over month increase, almost 0.5%. That's a lot. 0.5% in a month. On annualize that, it's about 6% a year. So think about this, like housing costs are still going up even in this market. So imagine when rates go down, how much is going to happen. So that first time homebuyer count, I said they were down a little bit. Apparently about 23% of them are still waiting for the election. I think that's just everybody. Leads are down. If you're in the industry, you know, leads are down the last probably 3 to 4 weeks. People just aren't looking right now. We're not getting the loan apps. We're not getting the inquiries. It's just, I think folks are waiting to see what happens in the election and where that goes from there. As far as the number of houses that have actually sold, we're on the worst level since 1995. So again, people just aren't buying. And you can see how much that has decreased even from COVID. And what I found really interesting, the amount of sales, look at how many sold in the early 2000s during the dot-com bubble and all that other stuff right before the mortgage meltdown. Holy smokes. This puts it in perspective. So, but overall, we're still selling about 3 million homes a year, a little over, and that could be the worst level since 1995. But overall, the value of homes is still up 3% year over year to 404,000 for that median home price. This is a cool looking chart that just tells you what I just told you, but in fun colors. The red is negative. Everything else is a positive. Look how many months for the last 20 years have been positive. So these are monthly. The biggest one I found was 2021, May, 2.6% home increase value in 1 month. 1 month. That's crazy. That'd be a good year. So 2.6 just in 1 month. So when you see 0.3 or 0 or the most recent 0.2, negative 0.2, that's a normal market. Like things are back to normal, but they're still going up is my point. So this is a good time to buy. I know you're going to say, no, it's not, you're the mortgage guy. I'm just telling you right now, houses keep going more expensive. And when supply and demand hits, when rates come down, more and more people are going to be out there buying homes. So let's have some fun. If this won't freeze on me, it looks like it might be frozen. We're going to have to be patient and or we'll just wrap it up. But there's some really fun stuff. I need this to go. Come on now. Come on. Do one more click. We'll do this. We'll get out and we'll go back in. Show the slideshow. So here's after the let's have some fun. This is affordability. The local median annual income is what they're comparing this to. So for example, Dallas, Texas. Apparently it's a really good place to buy because it's less than 4 times the income to buy the median income to buy a home in that city. Houston, also really good. Austin, not so much. Look at Los Angeles, 10 times the median income to buy a home. That is crazy. Seattle, crazy. New York, crazy. So all that's to say, the Midwest and the South, great place to buy. And that explains also why we've seen in North Texas a really big explosion in the last 5, 10, 15 years and had a really good run and probably will continue to still have a good run because we are affordable compared to the coastal cities. Halloween candy. I'm not a Reese's Pieces Cups guy. I mean, don't get me wrong, I'll eat one, but the reality is I had no idea they would dominate, according to this, from M&M's. M&M's, peanut M&M's, which is me. Go Idaho, go Nevada, or Colorado, sorry. Utah. I know my states, I promise. Utah and Idaho. Well done, peanut M&M guy right here. And then lastly, the face you make when you're waiting for the appraisal. I do know this when I sell homes, it is a big deal. And I try to keep that in mind when we do loans ourselves because it is stressful. I get it. And I thought that was fun. And as always, share, subscribe, forward, do the fun stuff that you know to do. We appreciate you watching. Hope you have a great rest of your week. I know this was long. I think and hope you got some information out of it. And if you didn't, that's okay. Reach out to us on social and just say you stink. I don't love it, but hey, any news is good news, right? Have a good day, guys.